Hi there, welcome to Kneppy Invest and welcome to November 12, 2024. We have about 1 hour and 25 minutes left of trading today, and overall, today has been slightly negative. I thought maybe we'd have a pretty good day. Maybe not pretty good, but at least we'll see a little bit of green, but everything seems to be down except for tech. So if you're heavily invested in tech companies, you probably had a pretty good day, up 1.19%. On the flip side, if you're heavily invested in mining companies, particularly gold and silver, you've probably had a pretty bad day and your portfolio's probably suffered. So Rizal's down 1.35%, and I fully expect many gold and silver companies to be in the top losers of the day. So we'll have a look at that later in the video. Okay, so let's talk about the agenda for today's video. I'm going to actually have a look at a few tweets. A couple of tweets I have planned to have a look at. One from the Kobayashi letter and another one to do with Bitcoin or something like that. In fact, that should lead into discussing and having a look at the Bitcoin chart because Bitcoin had a pretty interesting day yesterday. Well, not interesting, had an absolutely stellar day yesterday. And so after I've looked at the tweets, maybe have a look at trading and economics, what has driven our market today. I do know, I think it was consumer confidence and business confidence was supposed to be released in Australia today. So maybe nothing much to see there based off the lack of movement in our indices. And then maybe I'll take a look at a couple of brief, and then we'll have a look at the ASX today, best and worst performing sectors, indices, and also companies, and then a top 5 stocks of the day. Unfortunately, 4 of the companies are down, and at least 2 of them are down big. In fact, those 2 companies are in the top 3. And then if I have time, a few of your comments, and in fact, there is one comment I really want to touch upon because it's an interesting thought or question, and I'm not sure about it. It's making me question myself. So I'll do that at the end of towards the end of the video. Okay. So before we have a look at the ASX today, a few other things I just want to touch upon. I'll start off with these tweets. So the first one is from the Kobayashi letter, talking about Warren Buffett's cash pile increasing. Now, I've been hearing about this the last maybe few months, how he's been increasing his cash pile. And at few times, I haven't been that interested to delve more deeply into it, but I have thought, well, his total assets have significantly grown over the past, well, ever since he started investing. So as a percentage of his total assets, has his cash pile truly grown? Because some people would say there is a correlation between Warren Buffett's cash pile and the future state of the stock market. So he increases his cash pile because he believes maybe the market is overvalued or the market is about to fall. And so some people get the same thoughts. Well, he's increasing his cash pile, I should sell out. Anyway, but has his cash pile truly grown because his assets have grown over time? And thankfully, Kobayashi letter has answered that. So Warren Buffett's cash pile is truly historic on a total basis, but also on a percentage of his total assets basis. That's what they're talking about here. So Berkshire Hathaway, cash position relative to total assets, that's the most important thing, jumped to 28% in the third quarter of 2024, the most in at least 34 years. This means that Buffett's cash share has doubled in just a year. The company is piling into cash at a faster rate than in the mid-2000s. Back then, this percentage reached 24.5% and remained elevated until 2008. Berkshire Hathaway also decided to halt stock buybacks for the first time since 2018. Does Warren Buffett believe the market is expensive? Now, they mentioned 2000 or mid-2000s, so he had a lot of cash before the GFC. And back then, a lot of people were suggesting that maybe Warren Buffett has lost the plot. He's no longer a good investor, that sort of thing. So maybe we still have to wait another few years before we see another crash here. So Warren Buffett probably doesn't try to time the market. And I do think they, not only him, but also his partners, they're probably looking at the market and thinking, oh, everything's just overvalued. And that's probably why they're increasing cash pile, just because they do think the market is expensive. Maybe not too expensive, but definitely expensive. So that was an interesting tweet from the Kobayashi letter. Yeah, historic highs. But funny enough, it has been growing over the last 30 years. Yeah, 30 years. Sort of reverse of interest rates. The other tweet I want to look at, got to go to bookmarks. Here it is. Oh, this one is interesting. Yeah. So Mike Alfred says, this was just the other day, maybe even yesterday. If Bitcoin breaks 80,420, I don't know why 420, by tomorrow night at 7:50 p.m., I will give 2 lucky followers who like and retweet this 1.5 Bitcoin, a new Model X Plaid, NetJets, fractional ownership, 2 bottles of Paper 23, and a $10,000 Four Seasons gift card. And then the next day, Bitcoin broke 80,000, which leads into looking at the Bitcoin chart. Not only 80,000, it's now up to 87,754. And in fact, Bitcoin had an absolutely stellar day yesterday, up 10.4%. This is the sort of chart I am looking for all the time. Beautiful consolidation period that went for about 8 months, about 8 months, started in March, and then a breakout above the top of the trading range. Exactly what I'm looking for. And there was a catalyst behind this as well. And in fact, the other thing you should look at is volume. Look at the increase in volume as well. So this is a classic breakout Bitcoin. I did not buy any more. I have my stash of Bitcoin, and that's enough for me at this point in time. So Bitcoin on an absolute tear, all thanks to Trump. I won't mention what I think about Trump, but that's okay. We go back to this particular tweet. Mike Alfred broke his word, stiffing his followers of over $500,000 worth of rises. Now, apparently he said he wrote this as a joke. He never meant it. That's what they said here. Only after sweepstakes did he clarify this was all just a joke. Perhaps the 3,500 retweets were simply on account of how funny the idea of him keeping his words was. Anyway, and apparently he's done this before. Anyway, so that was an interesting tweet as well. Okay, let's move on to the market today. The ASX today. We'll have a look at the best and worst performing sectors and indices. So let's do that right now. IT, we already know IT's had a pretty good day. Utilities has had a pretty good day as well. What has driven utilities? Notice real estate and discretionary up as well. But what has driven utilities? Let's have a look at utilities. So I'm trying to think of your Origin Energy up, AGL up a little bit, Mercury, so Contact Energy. Quite a few, well, these companies down a fair bit are fairly small markup. So if you just look at the by market cap, yeah, it's had a pretty good day for utilities. Only APA Group down a little bit, but the share price or chart of that company is looking absolutely terrible. And I think it still looks terrible. Let's have a quick look at APA. Yep, still looking pretty terrible on the downtrend. But I do think at some point, value investors will look at this company and think, well, it's looking pretty good value. And even non-value investors might think, well, the upside, there's more upside here than further downside. And I think eventually those two group of investors or traders will put a little bit of support into APA Group's share price. But let's move on to the indices, and way down the bottom is gold, down 3.53%. And again, I fully expect many gold companies to be in the top losers of the day. Gold on the complete opposite to what happened with Bitcoin, although instead of falling 10%, gold only fell, was it 2.4% if I remember correctly? Let's have a look. Gold fell 2.4%. So it's a couple of big down days in the last 5. So this is definitely the weakest gold has been looking for a while. Now, if gold breaks below 2,600, that will be really negative because that's the last lows we saw, the previous low we saw back in early October. So if it falls below that, that could be a sign that maybe, just maybe, this uptrend is not only showing a little bit of weakness, but is falling apart. And if you look at silver, it's looking even worse. Silver has just lost its mojo. Okay, and the ASX 20 down 0.45%, which is a little bit more than the overall market. XJO is only down 0.27%. So I'd assume that's because of maybe weakness in iron ore again, maybe weakness in some energy. Yeah, energy is down a fair bit. So let's have a look at the ASX 20 just to see which companies are up, which companies are down. And I'm going to be a bit controversial here. I'm going to say 10 companies up, 10 down. Oh, there we go. So some people might say, or might have thought there'll be more companies down than up. But I do think the majority of companies that are the top of the ASX 20 have probably fallen today. So let's confirm that. Let's have a look at this ASX 20 by market cap. And yes, the top 5 companies are down. I would assume National Australia Bank has gone ex-dividend. I am making a wild assumption there, probably a wild educated assumption. So maybe word wild is not appropriate because it's probably wrong, but they just reported, and I would assume they're just gone ex-dividend. An easy way to find that out is just have a look at this page on ComSec, ex-dividend 12th of November. So that's another reason why the market is down. Well, not the market, but it's slight effect, a very slight effect, we'll say. Anyway, yeah, BHP down again. So Iron Ore's had a weak day. So the top 4 companies are down. If we have a look at percentage change, what's the worst performing company? NAB, ex-dividend. Then we have Aristocrat. They sold something today. Okay, that's interesting. Share price is down. The market doesn't like this. And then BHP and Rio Tinto. So where's Fortescue? Is Fortescue up? That's interesting. Anyway, let's turn our attention to the best and worst performing companies on the ASX today. This might be, we might find some surprises here. The whole reason I go through this process is to find any sort of positive announcement or negative announcement that I might have missed, that I might have bypassed earlier in the day. And that's definitely could happen. For instance, Weebit Nano is up 22%. Now, share price of this company has been up a fair bit the last few days. And is there any reason behind this? Let's have a look to see if the company's released any announcements. No. In fact, they have received a price query from the ASX. So this is interesting. I do like to look at price queries. So I did not know this was going to happen, but the share price has been on a pretty good run. And because I have not released any news flow, the ASX is wondering, hey, something happening here. And now I have talked about price queries before, questions 1, 2, and 3. So I won't discuss that. I fully expect question 1 to be no. And question 2 is irrelevant. And question 3, to maybe they might have an explanation in question 3. So where is Weebit? Oh, no, this is not an answer. This is, no, it says response. I don't see any responses there. Oh, I went straight past it. Okay. So as I mentioned, I fully expect question 1 to be no. Question 2, not applicable. Question 3, we might cease. They might write something or give us a little bit of insight to what might have driven the share price of this company a little bit higher over the past few days. And when I say a little bit higher, I'm talking about 50% increase in about 3 trading days. Yes, 50% increase in a few trading days. Share price was below $2. Now it's $3.34. So that's actually more than 50% in a few trading days. I would not even thinking about trading this. No way, Jose. This sort of chart, wouldn't say scares me, but there will be a significant drop in the share price sooner or later. It could be tomorrow, could be the next day, it could even be the rest of trading today. And let's go back to see if they wrote anything. Not much, because it's only like one sentence. Weebit Nano does not have any further information which explains the recent trading in the securities. This is the sort of question where management can be really creative. And they could really explain some stuff to us. Maybe what's going on behind the scenes that otherwise they can't tell us because they can only provide certain information. So maybe they could say, maybe there's been a broker upgrade, or maybe, I have no idea. They could say anything here to try to explain why the share price is going bonkers, but they haven't done that. Okay, let's go back to the top gainers. That sort of announcement, what's happening with Weebit Nano, I have no interest in dealing with. Other than that, there's nothing much here among the. Down the bottom we have a company a company in my top 5 stocks of the day. The only company that is up, Count Dracula, up 13.33%. They did have the AGM, I think, but I'll talk about Count later in the video. Vection Technology is up as well. And now let's have a look by market cap, just to see if there's anything interesting here. So Block, I'm pretty sure there was an upgrade for Block. So again, just an upgrade. I can confirm that. I'm just confirming that with Block. I thought maybe that'll be here somewhere. Yeah, but I'm pretty sure there was some sort of upgrade for Block. And that's one of the reasons why the share price is higher. Now, in fact, we can confirm this because if the share price of Block didn't adjust all that much in Wall Street, I did. So maybe the upgrade was on a broker in the United States. Share price up 11.9%. So we just followed on from them. In fact, the chart doesn't look half bad. I like this chart. Block, which means SQ1. What is it? SQ2. Which means their chart, yeah, the chart looks pretty good. This is a pretty good looking chart, but it is in a resistance zone right now. Okay, so Block, Liontown Resources, nothing of a note here. When I say nothing of note, I'm talking about in terms of announcements. Now, I might have missed one or two. For instance, no, there's no for instance here. I don't remember any of these companies apart from Count right at the bottom. Now, I might have missed one company, but I would have known if any of these companies released an announcement, particularly before 10 a.m. I might have missed one after 10 a.m., but definitely before 10 a.m. I don't remember any of these companies. Although Vulcan Energy, no, I could be wrong. Vulcan Energy, was that yesterday though? Oh, that's right. They went into training hold. Yeah, I did actually see this. They've gone into training hold. But why? That's the question. Why? Why have they gone into training hold? Material announcement regarding public funding. Okay, I assume that's positive, but no idea. Okay, now let's have a look at the top losers. And I fully expect a few of my top 5 stocks of the day to be in this list. So let's have a look at the top losers. Wouldn't be surprised to see at the top. Now, Global Data Center Group. This is a company I have traded in the past, down 57.1%. You might be saying, whoa, they must have released something really negative. No, it's just return of capital. Just return. And one of the reasons I got out of Global Data Center is I didn't want a return of capital. I'm not the biggest fan of that. Return of capitals aren't free. So you might get a dividend or return of capital and a dividend of $1.90 and the share price drops by that amount. It's dividends and return of capitals aren't free. They're not a free, you have to pay for it. And to pay for it, you just see the share price drop. So, they've talked about return of capital and also dividend. I think this was a return of capital plus a dividend, which equaled about $1.90. And that's why the share price is lower. In fact, if you have a look at dividends in ComSec, they haven't updated it. Not upgraded, updated. And anyway, that's why the share price is down a fair bit. So we can move on to the next loser. Paladin Energy down 28%. Not surprised, and that is in my top 5. Maybe it's at number 1. And coming in at number 4 in the worst performers today, or the top losers, Prophecy International down 23%. That company is also in my top 5 stocks of the day. And unfortunately, I do have a position in that company. A long-term position, and I've had no inclination to sell. But if I was trading it, I would not be in that company at all. And that's about it. Now let's have a look at my market cap. Okay, and don't forget, you're going to see a lot of gold companies here. So Paladin Energy, yeah, sure, that's the worst. But then Orabana down 8%. Spartan Resources down 8.8%. Hallis Metals down 8%. Predictive Discovery, I'm assuming that's gold, down 9%. Lycopodium had their AGM and a trading update. And that company is in my top 5 stocks, down 7%. OFX Group did release results today. That's also in my top 5 stocks. So I think I've talked about all my top 5 stocks yet. OFX Group down 12.8%. Black Cat is also gold. Andean Silver, not surprised there. Anyway. Okay, so let's get to the top 5 stocks of the day. A few companies that just missed out. Horizon Energy, Horizon, I think it's just called Horizon. Platinum Asset Management. Acro, I really wanted to include that company. The share price did nothing. Lifestyle Communities, share price down a little bit, maybe 4 or 5%. It does look like their company or what do they do? Sell houses to the retirees. It looks like the negative meter in regards to Lifestyle Communities has affected their sales or something like that. Nanavu and Nib Holdings. Just going to have a look to see Nib, what this one's done. It's down slightly. Okay, that's fine. Okay, so let's get to the top 5 stocks of the day, starting with Lycopodium. Now, this was or has been a company, I've not traded it yet over the past few years, but the share price has been probably is a more appropriate word here, was in a nice uptrend, but that uptrend has come to an end or came to an end recently. And then the company had their AGM today with some sort of update or trading update. Now, it's not mentioned in the title here, but trust me, there was a trading update in here. And they've also, I'm not sure if it was a trading update, it was financial year 25 guidance. They hinted at this in their results in August, that they will release some guidance, financial year 25 guidance, at their AGM. So this would be the first guidance of the year for the calendar year. So the most important thing here, and this is what I did when I saw they had released this announcement at 12:46 p.m. So this is a sort of announcement that I could have missed, and luckily I just found it. I knew they had the AGM today, and I was just looking for it. This one here. So what I did when I opened up this announcement is I opened up the financial year 24 media results, and I just wanted to see how their expectations for financial year 25 compared to financial year 24, because sometimes I'll just give you numbers. So let's find their financial year 25 guidance. There's the balance sheet, and there's the guidance. So revenue, NPAT, and dividend, and they've got an arrow there. Not sure where the arrow is pointing. Maybe it's pointing to the future. Some interesting things here. So revenue 345 to 360. So why did I want to open up this year's results? Because now we've got 3-year results. We've got financial year 23 and 24 actual results and financial year 25 expectations. Really nice growth in revenue from 23 to 24. And they had a revenue of about 350 million in 24. Now they're expecting revenue to be relatively flat, maybe a slight increase, but we'll say relatively flat. Now on to NPAT. So profit went from 47 million to 50.7 million. Now they're expecting profit to drop. So between 40 and 45 million. Dividends, well, they're being fairly broad with dividends, either 0 cents all the way up to 15 cents. So there's a chance you might not get any dividends from Lycopodium. So the market has not liked it, and I would assume that maybe the market expected slightly better numbers than these. However, the share price has been in a bit of a downtrend recently after a nice run in the share price. So let's have a look at the chart for Lycopodium. And there we go. Yeah, so definitely the trend has changed. It looked like it was changing back in this time last year. Looked like it was moving into a downtrend, trying, but that failed. But yeah, the share price of Lycopodium has been in uptrend since late 2021. There was a nice little breakout there at about $5, so you could have doubled your money. It almost tripled your money. But recently, we have seen a bit of weakness, and the sort of the catalyst behind the weakness was their results in August. The market didn't like it. 21st of August, share price on that particular day dropped 11.98%, and that was the shift in sentiment and the shift in trend. Just one announcement, and you can definitely see that share price dropped on that day and has continued to fall. Now a little bit of volatility in there, but share price right now has moved into a downtrend. We have seen a little bit of buying today, but not a lot. Volume has been up as well, but share price in a downtrend. So Lycopodium, I don't have any interest in trading this company at all. Of course, it's in a downtrend. Anyway, so that's Lycopodium. Coming in number 5. Number 4, the only positive company of the day is a company called Count. I'm assuming this has something to do with accounting. Actually, I don't know. I have actually never had a look at this company. But then I had a look at the AGM presentation. This company is fairly small in terms of market cap. I'm thinking 130. I did have a very quick look, 145.17. I have never had a look at this company in the past. And this is the first time I thought, ooh, maybe I should have a closer look at Count. I just said I think they're accounting just because they've got the word count in there. Count is a network of integrated accounting and wealth service firms. It serves both businesses and individuals, helping clients through I should have mentioned, not a classic accounting firm, but some sort of software as a service accounting or something for counting anyway, because when I did have a quick look at their announcement, they did mention ARR, which is not an accounting term. Well, it's an accounting, well, sort of. It's a term you'd find for software as a service. So just assuming accounting, software as a service. So maybe this company services accounting firms. Yeah, it seems like maybe that's what they do. Yeah, accounting and wealth service firms. Anyway, but other than that, I have no idea about that product. So let's move on to their AGM. The only thing I read here, or actually, was it the CEO? I'm going to open up both of them because they did have CEO address. I don't remember reading this. Let's go back to the presentation. I remember this was the first thing I looked at. I went, this is pretty nice growth. Nice growth. Final dividend. This is a dividend-paying company. Number of acquisitions completed. Don't like that. Underlying services there, but everything's growing at a nice clip. So statutory revenue up 22%. Statutory EBITDA down 17%. So some of these are down, but there are probably reasons behind that. But if you look at the underlying instead of statutory, you see really nice growth. So I think the reason some of this is down could be some one-offs or maybe some acquisition costs, something like that. So I really prefer to look at underlying here. And everything's growing at a pretty nice rate. The underlying NPAT up to 5.8 million. So the valuation of the company is probably, they're trading on a P ratio of maybe 20 to 30, maybe 30. Trading update. So this is very important. Trading updates. How is this company progressing? And this is when I went, oh, gee, this is a pretty nice trading update. So revenue up 53% and EBITDA up 87%, up to 6.4 million, which is pretty good number for 1 quarter of EBITDA. So there's a chance this company's profit might grow pretty significantly in financial year 25. And that's all she mentioned. So no sort of guidance for the whole financial year there. I did not have a look at the CEO address, and probably the main reason, it's just a lot of words. I like pretty pictures. I like simple things. Simple things for me, please. Anyway, so count, pretty good day, up 15.33%. Nice volume. I think that's nice volume. But let's have a look at the chart for count. Ticker is CUP. And the chart actually looks pretty good. Now, it looks like it is illiquidly traded. Just to confirm that, if we go to the trade history, it does trade most days, but some days it is fairly low. But this is liquid enough for me personally. I don't care if only 111,000 shares are traded. Sometimes you listen to or watch AusVis the Core, they will complain about the lack of liquidity in a company that trades something like $500,000 a day, because their backgrounds, a lot of those experts' backgrounds are for large fund managers who only trade those companies that have high liquidity. That sort of liquidity does not matter for retail investors. I just want to yell at the TV whenever I hear that. Some of those experts have said some weird things about liquidity or lack of liquidity about companies on the ASX when these companies have no problem with liquidity, only if a really big fund manager wants to take a big position. That's the only problem they would have. But anyway, count. Just based on the chart, it does look like it's, there's maybe a liquidity issue, but I don't think it's that, oh, this is a completely different company. Okay, so this is better. This tells me there is no liquidity issue. And in fact, this chart looks pretty good. There was a nice little bounce off a support level back in June. You could have bought this company at 50 cents and done really well, although, anyway. What can you say about this chart? The market got this one right. Share price moved into an uptrend and has just continued to go higher. A few days ago, share price rose, on the 4th of November, share price rose 9.3% and went sideways. That's another good sign. Share price for this company is at we're talking about almost 3-year high. Really good volume coming in today. Actually, I shouldn't check that. Okay, volume coming in today. We have seen we have seen an increase in volume since March. Compare March to now to the start of this particular period to March. much bigger volume during the last 8 or 9 months. That tells me someone or a few fund managers are taking position in this company, or this company is becoming a little bit more well-known among fund managers. That's also a good sign. Now, back to weekly chart. This company's been around for a while. I've never had a look at this company. That's interesting. Maybe today is that day. A pretty good looking chart for count. This is definitely a possibility for a buy. I'm at that point. A possible buy for count. In fact, I'm going to put that down. Cup. Coming in at number 3, we have Prophecy. Made a cardinal mistake. Prophecy, share price down 22.5%. And this is the case where the market also got something right. Share price has been under pressure, but they made a sort of an error how they, what's the word? How they report EMIT, one of their two, what do you call them, systems? Well, they're 2 products, yeah. They have EMIT and another one called Snare. Pretty sure EMIT is cybersecurity. I could be wrong. So changes to EMIT contracted ARR reporting. Now, ARR is not a normal accounting thing. So they could, calculate ARR however they like. So this is not an accounting standard. ARR is not an accounting standard. I'm pretty sure it's not. I'm just going to confirm that. ARR, not accounting standard. Which means because it's not an accounting standard, of course, I'm pretty sure it is recurring. I'm pretty sure it's not, Here we are. ARR is not a GAAP metric. It is defined by the software industry. So the reason that's important is because sometimes we'll see different companies calculate ARR differently. And so there's no standard. So you can do whatever you want with ARR. So I found this intriguing that they decided to say, hey, we're reporting ARR slightly wrong, or we're counting it wrong, something like that, which is intriguing because they don't have to sort of reveal this to anyone if they didn't want to. So this was a slight mistake on the company's behalf, and I'm sure they're going to fix the reasons this happened. Where does it start? Okay. I'll probably just talk about this straight from the start. I'll just quote it verbatim. The company advises that during the course of internal reviews into customer contracts and contract management undertaken as part of the process to deploy a new billing, contract management and reporting system at Prophecy, well, this is the longest sentence in history, to cover all business units and to enable improved contracted ARR reporting, some data discrepancies in the unaudited and non-IFRS contracted ARR values have been discovered. It's important to note that this does not impact reported revenue, sales contract values, cash flow, cash balances, or income in advance. Yet the share price is down 23%. And I think this is just the market saying, hey, we don't trust you now. All these values are audited as part of the company's financial reporting obligations. AR is not. These discrepancies are restricted to the EMIT business, have occurred over time. The reported contract AR numbers for Snare subscriptions and maintenance are unchanged. Okay, why? So some discrepancies are a result of customer contracts not being flagged as cancelled in our systems at the time that a contract ended, some due to the contracts not attaining the initial contracted values and continuing to be active customers but at a lower value. And then they go about, keep on going, and then they talk about the AR right now. And EMIT is growing. Anyway, the market doesn't like this. It's sort of, you've made a mistake here, how you calculate ARR, even though you don't have to provide these numbers to us. It's not a standard that you need, that sort of thing. The market says, no, we don't like you anymore. And share price has taken a hit after being hit hard the last probably 5 months or so. Share price hit a high of $1.05 in July. So that's 4 months ago. And the share price has dropped, almost halved in 4 months, even though the company is still on the cusp of becoming profitable and cash flow positive. It just shows you how negative sentiment can drive the share price down. There was nothing really negative driving the share price down. Maybe some slightly negative announcements, if I can remember. Nothing significantly negative. when I say significantly negative, I mean a profit downgrade or anything like that. Just going to go back over time, the last 4 months, just to see. So they released a business growth update on the 18th of July and final report on the 28th of August. That's it. So on the 18th of July, what did the share price do? Share price dropped a little bit, but that was the last maybe negative thing the company has released. So this just shows you that negative sentiment can drive the share price down a fair bit. Now, I'm actually thinking the share price is in a pretty sweet spot. So probably just above 50 cents is a good price for this company. If you have a look at the weekly chart, 50 cents has been a really good time to buy this company over the past 4 years. If it gets below 50 cents, that's even better. So I am just thinking at this point of actually adding to my position below 50 cents. So I don't really like doing that sort of thing. Dollar cost, not averaging, averaging down. Don't really like that, but I do think the market is a little bit overreacting here. So Prophecy International. Okay, coming in number 2, we have OFX Group. Release results today. Half-year results. The market didn't like it. Share price down 13.65%. My question would be why? Why are you in OFX Group right now? They released something really negative on the 17th of October, update on first half trading. I am actually going to open up this one and then have a look at the numbers. Did they meet expectations here? Do they have actually numbers here? Update. So they're expecting to deliver NOI of 111 million, underlying EBITDA of approximately 29 million. That's all they said. This is lower than anticipated. Let's have a look at the results. So we can compare this just to see if actually things are even going worse than expected. I'm not sure what NOI is. What's NOI? Do they actually say NOI here? They don't even have NOI in this little table. Oh, no, they do. Net operating income. Okay. So net operating income expected was 111 million and EBITDA 29. Net operating income of 111.2 million and underlying EBITDA of 29. So they hit their expectations. So obviously there was something else in this particular announcement that the market didn't like. Maybe it was the outlook. I actually did have a read of the outlook and it sounded okay. Expects to deliver a stronger second half driven by improving market conditions and client activity. Maybe the market is thinking, because I don't like it either when the management of a team or a company says we expect the second half to be stronger than the first half. So the reason I don't like that is sometimes they say weighted. The performance of the company should be weighted in the second half. And a lot of times that does not happen because the management have too high of expectations. Maybe that's what's happening here. Because I did read this and I thought it was an okay update or outlook. And then I just saw after trading share price dropped and I was like, okay, I might be missing something. But my other question would be, if you have a look at the chart, why? Why are we in this at all? I wouldn't call this company a high quality company. And the reason I say that is if you have a look at, say, the monthly chart, share price has done nothing since they listed back in 2013. This is not the chart of a high quality company. Look at the weekly chart. There it is. This is just a trading stock. And I've traded this in the past. In fact, I traded on a breakout back in May 2021 and I only held it for probably 6 to 9 months. So let's go back to the daily chart. And the other reason why am I asking why would you hold this is because they released that really negative announcement on the 17th. Share price has gone sideways, but then today share price down. And this is the interesting one. I remember because I did buy a position in this company at $2. So this would have been in May again. Share price started to go on a rally. I thought, this is good. And then it started to drop. Bounced off the support level a few times, but I've sold out by then. Yep, I sold out by then. I just didn't like the chart. It wasn't really going the direction I wanted to. And then I saw the share price rally again and I went, I've made a mistake here. But it was not a mistake because a lot of times when you do see a company release a negative announcement, typically the share price has already dropped. The market is fairly savvy when it comes to this, but this is an occasion where the market got it completely wrong. The market was a little bit more bullish about this company and it disappointed. And the share price had been hovering around a nice little support level at $1.38. Now it's fallen through. And I probably wouldn't be surprised to see the share price fall even further from here. The other thing I'm going to look at is the 1 minute chart, because when shares in this company started trading, share price didn't drop. And I lie. For some reason, I didn't think the share price was down, or that, oh, maybe there was a bounce. Maybe I checked it in the 3rd minute. It was only down a little bit. It wasn't down on that much, yeah. Maybe it was down like 1 or 2%. Anyway, let's go to the stock of the day. And that company is Paladin. Paladin Energy, down 28%. And they did release the most powerful type of announcement, a profit or guidance downgrade. So any sort of downgrade or upgrade will be very powerful when it comes to the share price movement. We see that with Paladin Energy today. If a company releases a profit upgrade, you will see the share price, or you should see the share price rally, unless the market suspected it was going to happen. So this is Paladin Energy, Langer Heinrich Mine update and revision of financial year 25 guidance. No sort of indication this is going to be negative or positive. You can see by the share price, it's negative. So this is a sort of announcement where I have to open it up. If they just said negative or downgrade or anything like that, I'd know straight away it's going to be negative. Okay, so I have no idea what their expectations were. And yeah, so what was their previous guidance? And so I skipped past this table, and I went straight to the commentary here. And straight away I went, oh, this is negative, because they say here, as a result of the lower than expected production results for October. So that's negative. And noting the ongoing challenges and operational variability experienced to date in ramping up production, they have revised their production guidance from 4 to 4.5 million pounds to 3 to 3.6 million pounds. Hence the share price drop. You might say, well, it's not a big decrease, but it's big enough. The market absolutely hates downgrades. You can see that today. I hate downgrades as well. It means either you're not being too conservative. I think all guidance should be conservative, because if a company does this and they have a production guidance downgrade, it means they weren't conservative. They're just thinking blue sky. If everything goes right, this is our production, and then things don't go right. That's why a lot of times you will see downgrades, because they haven't thought about things that can go wrong. And if things go wrong, well, we won't actually quite achieve our aim. So in my opinion, some of the goals of management in the year, maybe not the goals, I don't mind long-term goals, but if they do have some goals in the short term, yeah, be a little bit conservative. Just think, well, if this goes wrong, then our production might be a little bit lower. And have that as your guidance. And then if things go right as you want, then you can upgrade your guidance. And the market loves upgrades. So if they started their guidance at 3 to 3.6, now if they started their guidance at 2.8 to 3.4 million pounds, I would almost guarantee you the share price would be significantly higher today, even though the end production guidance is exactly the same. Because if you start at lower and then move up, compared to start at a high and then move down, you're going to see a much more positive reaction from the market. The market loves profit upgrades or production upgrades. Anyway, that's all you need to know about this. The rest is actually irrelevant. I'm not even sure what they talk about here. It's all irrelevant. So let's have a look at the chart for Paladin. This one looks ugly. In fact, the share price of Paladin has dropped by more than half since its highs. Share price reached a high of $18 in May and is now $7. So seeing a significant drop in share price in a fairly short period of time. And this is a really ugly chart. A really nice run up. So mirroring uranium prices, and then 2 bad announcements in a row. The first one was October. Forget what that was. 28th of October. Oh, the cash flow report. Yeah, that was negative. And yeah, let's go back to the chart. Yeah. So at this point, share price in downtrend. Is the market overreacting? I don't know. It's in a nice little support zone. In fact, a really nice support level for this company. We'll say support zone is around there. We'll put it like right there. So we're talking about $5.50. So a little bit more to fall from here to get to that zone. So between 550 and about 650, but maybe 625. But yeah, share price in the chart looks pretty ugly for Paladin. Okay, that's all I got for this portion of the video. Top 5 stocks of the day. I'm just going to briefly have a look at a couple of comments, because the first one here, actually this one here, Jason Nimmo, bro, Air New Zealand, check out what sector it's in, then look at what sector Qantas is in. Still love the channel, and please keep it going. I'm confused. Air New Zealand is an airline. Qantas is an airline. They should not be in different sectors. They should be in the same sector. So I don't understand what you're getting at here. They should be in the same sectors. Maybe Air New Zealand, let's see, it's industrials. Qantas, industrials. I just don't understand how you could think. Maybe you can give me some clarification. Maybe I'm wrong. Maybe I'm completely wrong to think that Air New Zealand and Qantas are in the same sector, and compare them, these two companies, is completely wrong. They're uncomparable. I would say Air New Zealand and Qantas are, to two companies that you have to compare. If you want to compare a company to Qantas, Air New Zealand, Southwest Airlines, some of the airlines are listed in America, maybe. But Air New Zealand and Qantas, they're airlines in the same sector. So I don't know, Jason Nimmo, what you're talking about here. So maybe I'm wrong. Maybe you're absolutely right. Okay. Jeremy Campbell. I very much appreciate all the time and effort you put into the channel. Thank you. What's the least amount you would diversify a portfolio over? For example, if you had $100,000, what's the maximum you would have in a single shareholding? Obviously, the best investors still make plenty of mistakes, but if you're spread too thin, then you don't get much upside either. I never have conviction, and the reason I don't have conviction is because I want control. So the only way I'm going to be highly concentrated is if I have control, which means I am running a country, not a country, well, maybe a country, but I was going to say company. That's the only way I would be highly concentrated, if I'm running a company. Because if I'm not running a company and I put all my faith and hope into the management of the company, I just can't handle that, because they're going to make mistakes, or there's a chance they'll make mistakes, and I have no control. So it's one of the reasons why I am diversified. So if I had 100,000, which I do, I'm thinking how much money I have now and what comfort level I would have percentage in one company. What percentage would that be where I would be comfortable? It's not 10%, it's not 5%. I would say it's a few percent. It's obviously company related, but it's just a few percent. If you spread it too thin, then you don't get much upside. I actually disagree with that. I think if you mostly invest in the big cap companies, the really big companies, particularly in Australia, you're not going to get much upside, because that's where the majority of, say, the XJO, that's where the majority of the XJO is. When it comes to small cap companies, I think you can't be spread too thin. And in fact, I've done fairly well, more than fairly well, by being spread out. I have way more holdings than the typical 20 to 25 recommended, way more than that. And still people tell me, you have way too many investments, way too many trades, you have to keep it narrow, or then you just be, buying the index. No, because the majority of my holdings, not say majority, a lot of my holdings are small cap companies who don't make up any part of the indices. Anyway. So yeah, I think it's very important to know thyself. So I like control, and I don't have this conviction. So I might like what I read in a company. So a lot of companies I do like, but I have no control over their future. If I was running a company myself, I would have control, and that's the only way I would be highly concentrated. And more than likely, I'd be like Musk. Buy one company here, control that company, another company over there. Yeah. Are there any chart analysis courses that you recommend? No. I have never partaken in any chart analysis courses, so I couldn't even think of one on top of my head. I'm pretty sure there are some out there. I did have a look at one once, Wealth Within. It was just way too much. Yeah, share trading courses and education. That was way too much. They have some podcasts, some YouTube videos. Have a look at those. But I did actually get a price, and I was like, whoa, that's a lot of money. Anyway. And then I've looked at a few others, and yeah, a lot of money. I'm not sure if it's. I think Wealth Within was the one who said to me, "You need a mentor. You can only be successful if you have a mentor." And I was like, "No, that's not for me." But again, different courses for different people. What's that I was saying? Anyway, Sensei, thank you, Sensei. What else do we have here? Anderson, more sharing on the trailing loss indicators as you progress, please. Interesting, could be something very useful. Yes, I do plan to do the Solana video sooner or later. Parwan Chaon, hi, sorry for absolutely butchering a name. Just want to know what's your trading platform which allows 20% trading. I don't use stop losses in any platform. This is all manual stop losses. So forget that this is a 20% stop loss that will be automatically triggered when the share price drops. It's a manual one. I look at charts every single day. And when I see a share price of a company dropping, say below my 20% trailing stop, then I will or might take profits. It's not an automatic thing. I've done that in the past and I don't like it. So that's just me with stop losses. I don't like having automatic stop losses. Just me. And I think one of the reasons behind that is I'm active enough. I have heard people say, well, how do you know when to get out? It tells you when to get out. But because I'm fairly active, and I look at charts all day, I can tell you when the share price of a company that I am trading is getting close to my stop loss. And I will follow that company a little bit more. So there's no platform who allows that. I think if you do stop losses, you have to put a share price in for each individual company. This was just through TradingView. Yes, no idea. No idea. Sorry. So TTTN1DP. What does platform produce text or email alerts when trailing stop occurs? I would assume they would. The other thing I didn't like about stop losses in the platform I was in at that point, I forget which one, you got to pay more money. I just didn't like that. Thank you. Yes, I did have a safe trip. Thank you, Anderson. Thoughts on XRP? XRP. Is this crypto? When you said XRP, the only thing I could think of was crypto. What is XRP? Is that the, I have no idea. So what's XR? Is that Ripple? Ripple, huh? I have no idea about Ripple. I couldn't even tell you the differences between the different cryptocurrencies. Let's have a look at the chart for Ripple. So why is Ripple not doing anything? I'm just going to Google Ripple because what's the attractiveness of Ripple? No idea. I'm going to say what you should always say when you have no idea. Sorry, Sensei, I have zero thoughts on XRP. I have zero thoughts. Zero, I just don't know. Solana, okay, so we're seeing really good run-ups in cryptocurrencies, and so we're getting a few questions of other cryptos. Solana chart is looking really good as well. Let's Solana. I would assume they're all looking pretty good. I'm just making assumptions here. They're all looking pretty good. Yeah, this one looks actually really nice. This is fairly similar than Bitcoin, but yeah, I mean, if I did become a trader, then yeah, cryptocurrency. Actually, I shouldn't say that because I am becoming a trader. Yeah, cryptocurrency. I can actually imagine just trading cryptocurrency. There's a chart. Trade anything with a chart. Yes, trade. You can trade anything with a chart. In fact, that chart does look good. I want to go back to Ripple because that Ripple one just didn't look right. No, Ripple and it looks right there. I don't know. I understand Ripple. And it's good. It's good to know you don't understand something. Vinhili, Hi, Kneppy. Is your TradingView subscription set to beginner or professional? And do you have to pay to get the MA ribbon R2? Thank you. No, I do not pay for the MA ribbon. It's one of the unpayable things, non-pay things, or whatever you want to call them. I do pay a subscription, but I don't know what it's. Let's have a look. Non-professional private subscriber. So I only pay $170 a year. So I'm not sure what that is, but that's all I need. That's all I need. Yeah. Sensei, did you pick up notice Lovisa a long time ago? In January 2016, it was 225 and go to 37.50 in 2024. Okay, this will be my last question of the day. So Sensei, Sensei is Correctos. No, Kneppy is Correctos. The New York Stock Exchange is very soon going to start 22-hour trading. Yes, I've heard that. Yes, and we have confirmation. Anyway, let's go back to this question. Lovisa. I first noticed Lovisa when they first listed. And where's my chart? Where's TradingView? Did I close out of it? Silly boy. I first noticed Lovisa when they first listed. And there was, just after they first listed, the share price plunged. I can't remember why they plunged, but the share price plunged. And I was thinking, oh, this could be interesting. Here we go. Yeah, here we go. Just after they listed, the share price in January 2016, it plunged 37.5% in a week and fell to $2. And I was thinking, ooh, this could be a nice little buy. And the share price then, you can actually see the share price actually went sideways for about 3 months after that. And the share price moved into a beautiful uptrend. And we have seen at times the share price does go on a bit of a dip, COVID-19. But the share price has been a pretty good uptrend since then. No complaints about this uptrend with Lovisa. So I wouldn't say I'm kicking myself not buying shares at $2. I still remember I thought it was really pretty good value at that point, around $2. And at that point, I was also mostly a value investor. So I thought, oh, this is pretty good value. And yeah, I wouldn't say I'm kicking myself, but yeah, I've definitely been following Lovisa since then because I just remember that and thinking, oh, this is what you should be looking for, these dips in the share price. The market is overreacting and didn't do anything about it. Anyway, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.